Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody is having a fantastic week. We're here today to discuss our local real estate market here in Leon County. We're going to talk about some real estate related metrics from the third quarter of this year. We're going to compare those metrics to what we saw in the third quarter of 2023 and just kind of evaluate how our market here in Leon County it did in the third quarter of this year compared to a year ago, and just give you guys an idea of what direction I think our local real estate market is headed in. We're also going to talk about some tips if you are looking to buy and sell in today's market, and I'm going to give you my predictions on what I think we can expect to see happen in the local real estate market here in the next few months. And then I'm also going to talk about some broader economic news and broader real estate related news and tie that into our local real estate market to give you guys kind of a good insight into what's going on. So first of all, let's just go ahead and let's jump into it, and we'll talk about kind of what we saw in general. So basically in the third quarter of this year, we saw a continuation of the same trends that we've been seeing since the end of 2023. So, and those trends are basically a slowdown in the number of properties sold, more homes for sale than what we saw a year ago. Home prices continue to go up. It's taking homes longer to sell than it did a year ago, and homes are selling for less compared to what the asking price of the homes are. So, and that's called the total sales, or I'm sorry, the sale price to list price ratio. That number is coming down. So, but basically overall, it's a softening. We've seen a softening of the market over the past 9 months, and that trend in the third quarter of this year continued. So the only I guess metric that didn't coincide with the slowing trend is home prices are continuing to go up, but we'll get into that a little bit more in a minute and talk about why that is. So the first metric I want to talk about is the number of properties listed for sale. So in the third quarter of this year, we saw a 12% jump in the number of properties available for sale, which is good news. We've had, as you know, I've talked about a lot, we've had a shortage of available homes for sale for quite a while now. It got really bad after the pandemic, probably starting at the end of 2020, early 2021. That's when inventory got really low, and it's been very low, but has started to come up some. So even though we're 12% up from a year ago, we are still, we are still 23% below where we were at in the third quarter of 2019, which would be considered, pre-pandemic levels. So even though we're up from a year ago by 12%, the number of properties listed for sale and available for sale is still very low. It's still 23% below pre-pandemic levels. So, but we're headed in the right direction at least. I think if we continue to see the number of properties listed for sale go up at the same rate we've been seeing it for the last 9 months or so, we'll probably be back to pre-pandemic levels of inventory probably in about 18 to 24 months. So somewhere in that time frame. That could change a little bit, just depends on what goes on with new construction and also kind of what goes on with interest rates, because if interest rates go down like to 6% or lower, you're going to see more people start to list their homes for sale because of the lower interest rates. Basically what's going on right now is a lot of people who have 3 or 4% rates on their mortgages, on their existing mortgages, they don't want to sell their house and then get locked into a 7% rate on the house that they're buying. So they're just sitting tight right now with their current home instead of selling. So, but if rates go down, a lot of those people will probably list their homes for sale, and that'll help inventory go up. So the next metric I want to talk about though is the number of properties sold. So sales decreased by 7% in the third quarter of this year compared to a year ago. So we had 902 homes that sold in the third quarter of 2024. And just to put it in perspective, that is the lowest number of property sales in Leon County going all the way back to the third quarter of 2013. So that's 11 years ago. That's a really low number. Obviously, probably the main thing that's causing that is the higher interest rates. Right now, mortgage interest rates for owner-occupant buyers are at around 7%. If you're buying an investment property or second home, mortgage interest rates are around 8%. So that's a lot higher than where they were at a few years ago, and that's the main reason home sales are down. The other reason, home prices right now are really high, and that's also contributing to the low number of sales to a certain extent. Not as much as the interest rates, though. Interest rates are the primary driver of why the sales are slow, in my opinion. The other thing, it's a presidential election year. Typically, presidential election years are a little bit slower than non-presidential election years, everything else being equal. So that's also part of it. And then also just we've had 3 years of inflation, and so everything costs a lot right now. So the cost of living for people has gone up, and that's also slowed home sales down to a certain extent. So, but despite the fact that we've had very slow sales, we're at an 11-year low in terms of home sales, home prices are still going up. So in the third quarter of this year, we saw a 5% increase in home values compared to the third quarter of 2023. That is a good level of price appreciation. When you're looking at price appreciation, you don't want it to be too low. You certainly don't want prices to be going down, but at the same time, you also don't want to see prices skyrocketing like we saw in like 2021, 2022, just because that kind of creates an unsustainable environment where you're going to start pricing a lot of home buyers out of the market if prices go up too fast. But 5%, it's a very good, it's a solid increase in home values. It's right in line there with historical normal levels of appreciation. 4% is actually historically the normal average appreciation value in homes. So we're like right there, just a little bit above it. So that's beautiful thing to see. However, the main reason I think home prices are going up is because solely of the very low number of properties available for sale. So, like I said, we're still 23% below the level of inventory that we saw in 2019, which was be considered pre-pandemic levels, which was kind of the last time we had somewhat of a normal real estate market. Inventory even in 2019 was a little bit tight. If you go back to 2015, I'd say 2015 was a true balanced market where you had almost like a perfect balance between sellers and buyers. 2019 we were in a seller's market, not as much as of a seller's market as we're in right now, obviously though. But home prices, I believe that they will probably continue to go up very slowly. We could see, if the inventory levels continue to go up, which I think that they probably will, we'll probably see home prices year over year, increases in home prices to taper off to even lower than 5%, maybe down to like 2-3%, or maybe they may even get flat at some point. As long as they don't go down, that's all that matters. So far, we haven't seen any evidence that home prices in Leon County are going to go down, but there is some evidence to show that the rate of appreciation still may fall even a little bit further below where we're at right now at 5%. So average sale price to list price ratio in the third quarter of this year was down by 1.24% compared to the third quarter of 2023. So on average, homes are selling for 97.97% of the asking price of homes. So almost 98%. That's still pretty good. So if you look at that, if you look historically, that's still high. It's a high number. It shows that we're still in a seller's market. It is down from a year ago, though. A year ago in the third quarter 2023, the average sale price list price ratio was 99.19%. So not as high as a year ago. Again, the drop in the sale price list price ratio shows that we are in a market that is softening. It's heading in the direction more so of a buyer's market. And that metric that I just read off to you supports that theory. Average days on the market that it took a home to sell in the third quarter of this year was up by 29% from a year ago. So in the third quarter of this year, it took 53 days on average for a home to sell. A year ago in the third quarter, it took only 41 days. So almost a 12 days, almost 2 week increase in the amount of time that it took a home to sell. That's a pretty big jump. That's a pretty good indicator that the market is definitely softening. It's taking longer for people to sell their homes. They're sitting on the market longer. The last metric I want to talk about is the what I call the distressed sales to total sales ratio. So distressed sales, I've talked about this. I won't spend too much time on it, but I've talked about it before. Distressed sales are usually foreclosures or short sales, but they can also be other types of sales like bankruptcy sales or estate sales or tax deed sales. Basically any type of sale where the nature of the sale itself lends itself to the property selling for under market value. Distressed sales are bad because they bring down the value of properties that are nearby. But the good news is that distressed sales in Leon County in the third quarter only made up 1.9% of overall sales. That number is down by 0.7% from a year ago in 2023 in the third quarter, when distressed sales made up 2.6% of overall sales. So good news, distressed sales are so low, they're not really having any impact whatsoever on Tallahassee's real estate market. So what should we be looking for if you're thinking about buying or selling? What do we need to be paying attention to determine what direction the real estate market is going to be headed in? Well, first thing is interest rates. We got to continue to monitor interest rates because interest rates are going to drive the direction of the real estate market. They're going to drive what happens with home sales. And if we're looking at interest rates, really we need to be looking at inflation, because inflation is what's really determining largely what's going on with mortgage interest rates. So right now inflation is still elevated. It's still hovering between 2.5 and 3%, which is above the Federal Reserve's stated goal of 2%. So as long as inflation continues to be elevated, what will likely happen is the Federal Reserve will slow down the decreasing of the federal funds rate. So I think they've dropped it 3/4 of a point in the past couple months or few months, but that will probably stop unless we see inflation get down to 2%. So if inflation stays elevated, basically mortgage interest rates are going to stay about where they're at right now. There may be some fluctuation up and down, but it's probably going to stay in that same upper sixes, lower sevens range where we've seen it recently. Now, if inflation goes down, if it gets down to 2%, stays at 2%, maybe drops below 2%, federal funds rate will be decreased. The Federal Reserve will start dropping it again, and mortgage interest rates will come down. So pay attention to inflation, pay attention to mortgage interest rates, because that's going to be a big driver of what happens in the real estate market. Also, as you guys know, we have a new president now. We have a new Congress, or we will have a new president in January, and we will have a new Congress. With that, we'll bring new policy changes. So the three types of policy changes that you really want to pay attention to that are going to have an effect on real estate. Number one is going to be energy. What happens with energy? Are we producing more energy? If we produce more energy with more oil, it's going to bring down the cost of construction. It's going to bring down the cost of materials. It's going to bring down the cost of a lot of stuff. So that will also have an impact on home sales. It'll have an impact on new construction too. If there's more homes being built, that's going to lead to more home sales. And if people are saving money because things don't cost as much, that's also going to increase people buying homes. So pay attention to energy. The other thing to pay attention to is the tax code. The current tax rates expire this year in 2025, so there's likely going to be some legislation passed dealing with the tax code. We'll probably get at least an extension of the current tax breaks that we had passed in 2017, but likely what will also happen is we'll probably see a further reduction in tax rates. If that happens, which I think it is likely, then that will obviously stimulate housing. It'll stimulate the overall economy. And we'll see more home sales, and we'll see more new construction. That will be an overall boon to the real estate market, which I think will be helpful overall. So pay attention to tax rates, and the last thing to pay attention to is just business regulation cuts. Or if we start stripping more regulations from businesses, make it easier to run businesses, that will also likely have an overall impact on the economy and the real estate market. So we'll see what happens, but pay attention to those. If you're buying a house in today's market, I've got some tips for you. So obviously the market is starting to slow, which is a good thing, but you still need to be prepared. If you're buying a house, you need to study up on the market where you're buying a house at. Specifically, you need to get specific. Even look in the neighborhood. Always look at recent sales comps. See what homes have been selling for. Also, you want to look at what other homes are on the market currently, obviously, and then also look at what other properties that are currently under contract are listed for, because right now we're kind of in a changing market a little bit. I think price appreciation is starting to slow down. There's even some areas where you're starting to see home prices come down a little bit. In the broader real estate market, we haven't seen that, but I have noticed here in Leon County, in certain areas, certain neighborhoods, you're seeing home prices lower than where they were in the spring of 2024. So you don't want to overpay for something, so really pay attention to what's going on with the sales comps and what's going on with prices before you make an offer. Also, if you're getting financing, always have your pre-qualification letter ready to submit with an offer. And if you see a house that you really like, it's priced good, it shows well, be prepared to move quick, because even though the market is slowing down, homes that are priced right, that are prepared well to show that they show well and they're in good areas, they're still moving quickly. So don't lose out by dragging your feet. Be prepared. And if you are selling a house, you need to understand that the market has shifted. It's slowing down. So again, if you're pricing your house, make sure to look at the comps, just like I mentioned buyers should be doing too. But if you're selling your house, look at what homes are selling for or have been selling for in the last 6 months in your neighborhood. Look at what other homes are on the market. What homes are you competing with for buyers? That's important to know. And then also look at what other homes, similar homes to yours that are currently under contract, what those properties were listed for. You want to look at that, because that's going to tell you if a house is under contract, that means it was priced good enough to get an offer. So you want to kind of mimic what those homes are priced at. Do not try to overprice your home in this market. Do not try to price your home above what similar comps have been selling for. You need to price your house at market value, or maybe even slightly below it, to try to drive up a lot of interest in the property. That is the best strategy in today's market if you're selling a house, if you want to sell it quickly and get the most money. And that's it. So I hope you guys enjoyed this analysis. If you have any questions about our local real estate market, feel free to reach out to me. I would be glad to answer any questions that you have. Even if it's just something very general, don't hesitate to reach out to me. I'm glad to be a help in any way I can. You can email me, you can shoot me a text, you can give me a call, you can leave a comment on this video. And as always, if you guys like this video, if you like the content, please hit the like button and the subscribe button to my YouTube channel. And I hope you guys have a great Thanksgiving and a great holiday as well. And I will talk to you guys after the first of the year. Thanks, and have a great day.